Did you know that if you bought silver in 1980, your investment would be dead money today? For 45 years, silver has been trapped. But the last 15-year chart tells a completely different story. Today, I'm using the Wyckoff method to show you why a massive breakout to $139 is on the horizon. In this video, you will learn why silver investment has been dead investments, how smart money absorbed supply between 2013 and 2024, the Wyckoff sign of strength that triggered the current parabolic move, our two-step price targets, $95 short-term and $139 long-term. For full transparency, please stop the video and read the disclaimer and my disclosure statement on this asset before following any trade ideas. If you want to master the markets and trade like a pro, hit that subscribe button and turn on notifications. If you find this analysis helpful, please drop a comment below with the word Wyckoff or ask a question. Your engagement helps the YouTube algorithm push this video to other retail traders who need to get this awareness and systematic approach. Let's help the community grow. If you have not familiar with Wyckoff, I would recommend to watch my educational videos mapped to this in the YouTube card. My analysis is based on the Wyckoff methodology, a structured technical analysis framework established by Dr. Richard Wyckoff in the early 1900s. Unlike lagging indicators such as moving average, RSI or others, Wyckoff focuses on leading indicators, daily price action, and volume. The methodology relies on three core principles. Demand versus supply. When demand exceeds supply, prices rise. When supply exceeds demand, prices fall. Cause versus effect. A period of range-bound price action. The cause builds the momentum for the next trend. The effect. Effort versus result. We look for harmony between volume, effort, and price movement. Result divergence here often signals a trend reversal. Now, let's open up the charts and get to work. The silver cycle, a 50-year perspective. The macro view, 1975, present. To understand where silver is going, we must first look at where it has been. Over the last 50 years, silver has followed a massive cyclical pattern. The Hunt Brothers era, 1975 to 1980, starting from just $4, silver entered a historic uptrend, peaking near $45. The long winter, 1980 to 1993, a multi-year downtrend followed, bottoming out between $3 and $4. The modern recovery, 1993 to 2020, we saw another massive run back to the $40 to $45 level, followed by a retest of the lows near $12 during the 2020 liquidity event. The current phase, since mid-2020, a new, aggressive uptrend has been initiated. The dead money trap. When we zoom out, it becomes clear that silver has been in a sideways trend for nearly half a century. The reality check: if you had invested in silver at the 1980 peak, your capital would be dead money today. For 45 years, the price has essentially rotated within the same $4 to $45 range without a sustained breakout to new all-time highs. Why this time is different: the Wyckoff perspective. Our discussion today isn't about dwelling on the past 50 years of stagnation. It is about the major shift happening right now. Let's zoom into a more recent time frame. We are looking at the price variation from 2011 to 2025, a 15-year journey. Our focus here is on a specific Wyckoff market phase, accumulation. We are going to break down how silver has spent over a decade building a cause that is currently on the verge of a massive breakout, and more importantly, how you can strategize for the investment decisions ahead. At its core, the Wyckoff method is a leading indicator. Unlike lagging signals that tell you what happened, Wyckoff focuses on the relationship between demand and supply to tell us what is likely to happen. We'll be diving into the key phases. Number 1. Stopping the previous trend. 2. Building the cause. 3. The test phase. 4. The internal trend within the range. 5. And finally, the breakout. Remember, every candle you see is a monthly bar, white for bullish and red for bearish. The 15-year, cause, 2011 to 2024. The story starts in 2009. Silver rallied from $8.45 all the way to $48.35 by 2011, reaching what Wyckoff calls a buying climax. After that, the trend stopped and entered a massive 15-year sideways range between $13 and $48. This is the yellow box, the period of preparation. The blue box highlight. By mid-2013, the cause began building. Look closely at 2017 through 2019. The price bars are small, and the volume is incredibly low compared to the 2011 peak. This is smart money quietly absorbing supply. Selling pressure was drying up because the big players were moving silver from weak hands to strong hands. The test and change in character, 2020. In 2020, we saw a final test to check for remaining supply. Once absorbed, we saw a change in character. Look at the path of least resistance. The price shot from $10 to over $27 in just 5 months. This wasn't just luck, it was supported by a massive surge in volume, signaling a shift in the market's internal harmony. Calculating the effect, the targets. Because the cause was so long, the effect should be equally powerful. We've computed our targets in 2 steps. See at right side of the chart. The subcount, 2022 to 2025. This suggests an immediate short-term target of $84 to $95. The major range, 2012 to 2025. This 15-year base gives us a long-term target of $122 to $139. We are currently in the $65 to $72 zone. While we've come a long way, the math of the last 15 years suggests there is still significant upside potential. And remember, we haven't even computed the target from the 50-year base yet. You can see target computation in 2 segment that covers 13 years of cause. The subcount, 2022 to 2025. This suggests an immediate short-term target of $84 to $95. The major range, 2012 to 2025. This 15-year base gives us a long-term target of $122 to $139. Having a good strategy for entering silver long-term could yield significant profit. Now that we have broken the upper range of $48.35, the price may come back to test the $47 to $50 range as a support, LPS, before pushing higher. The cause for silver has been building for 15 years. We have officially moved out of the accumulation phase and into the markup phase. While the 50-year history shows dead money, the current 15-year Wyckoff structure suggests we are entering a period of generational price discovery. Stay patient, watch the $50 support, and let the effect play out to our targets of $95 and $139. Your profit targets. Short-term target, $84 to $95. Long-term target, $122 to $139. If you want to master the markets and trade like a pro, hit that subscribe button and turn on notifications. If you find this analysis helpful, please drop a comment below with the word Wyckoff or ask a question. Your engagement helps the YouTube algorithm push this video to other retail traders who need to get this awareness and systematic approach. Let's help the community grow.